What's going on? Oh, what's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well. And yeah, let's get straight into things. Do mind my fire alarm. It's going to be beeping for this video. I need to change the batteries. But nonetheless, let's get straight into things. So you can see we had an up close day today, starting to try and trade into that weekly fair value gap that I drew our attention to at the beginning of the week. Hopefully you've watched Sunday's video. Monday's video wasn't very insightful purely because there wasn't much going on. However, if you watch Sunday's video, you'll know that my bias was wanting to see us try and trade up into this buy side liquidity. Now, what's interesting to me is the fact that we've closed below the weekly fair value gap. To me, that's quite bearish signaling. So what I'm going to be paying close attention to now is the midpoint of this wick that was created. And the reason for that is because if we continue to stay below that and respect these levels, I'd expect us to now try and trade down into a discount, running out Tuesday's low and potentially even reaching down into this fair value gap down here within the daily bullish breaker. So let's get the midpoint of this wick marked out like so. We'll make this red. Oh, excuse me. We'll also make it dashed, and I'm going to put daily consequent encroachment. That is so annoying, guys. I do apologize. Hopefully it should be done tomorrow. Nonetheless, daily consequent encroachment, and then I am looking at that Tuesday low as a sell side target moving into Wednesday. Now we do have high impact news tomorrow, so if we're still above that sell side target by 8:30 and we're still below here, then I'll be looking for potential short setups on dollar with longs on the pound and euro. And you can already see that we've gapped down. But yeah, it's just interesting to me that the daily, volume was closing below it. Yes, we've tapped into it on the 4 hour, but that's not a problem. But you can see we've came up, we've ran a level of stops where here, ran stops. We've also traded into this bearish order block right here, traded into that right here. And you can see our price is now reacting off of that. So I'm looking to see if price can start to show some weakness and trade on lower and potentially reach into these fair value gaps. Now on the daily, there was a gap down here, wasn't there? There was this range right here. Let's get that marked out. And what I'm going to do is I'm going to make this yellow, just make it stand out. And then we know that's a daily fair value gap. So now if we drop down to the 1 hour, we can look at the daily, and you can see not the cleanest price action, not the cleanest at all. You can see we took out both sides of Monday, grabbing stop sell side and the buy side. But assuming we have made a high here and we are going to trade lower, then we have a high, a low, a higher high, and that means that this last down close candle should act as a breaker, assuming we're going to trade on lower. But again, I'm looking for respect of this level right here, and then more specifically you can see that lines up with this bearish order block. So what we can do is we can mark out the low of that, and that will be the very highest I want to see price trade tomorrow for me to remain bearish on dollar, moving into its high impact news at 10 a.m. with expectation for it to run to the downside and try and get below this low into that daily fair value gap. So overall, I am expecting downwards price action on Wednesday. Again, this is all assuming we continue to respect the daily consequent encroachment that was created today on Tuesday. So I hope that all makes sense. But you can see how specific I'm getting and how I'm simply looking at the levels and then dropping down to low time frames and figuring out, okay, what PD arrays are lining up with these levels that support our bias. Because on the 15 minute, so on the 1 hour, for example, you can see we have the low of this bearish order block. So between here and here is a bearish order block. This is getting quite messy. Let me get rid of this for now. This is a bearish order block. So I want to see us respect the 50% level of that at very most. But you can see the 25% level lines up with the daily consequent encroachment. So again, that's confluence. And then once we drop down to the 15 minute, what do we see? Well, we have a breaker, last down close candle before the up move that ran out stops and traded on lower. Plus we have a down close candle and a fair value gap. So if we match these together, I'd like to think that the high of the day tomorrow could get made there. I'm not saying it will or won't, but what I'm saying is that it's very high probability that if price trades into that and we find a reaction away from it, it'll be nice to think that that will set us up nicely with the expectation to run for that Tuesday low I was talking about. If we get above that daily consequent encroachment, whole nother story, and we're likely going to run into the buy side target I was talking about. However, just looking at how we're reacting to these premium levels is suggesting to me that we're likely going to see some kind of not reversal, but I want to see a reaction at this point, and I want to see price struggle to get back up here before trading on lower into that Tuesday low. So yeah, that's pretty much everything on dollar. I hope that all makes sense. But now that we have that bias on dollar, if we're expecting lower dollar, we can now easily and smoothly move into GBP USD. So if we go onto the daily, you can see pounds are quite weak, not as weak as euro as you should be aware. But what's interesting is we had this fair value gap down here. We haven't quite reached it. We just traded into this range, taking out this daily low right here. Oh no, my bad. We didn't even take out that daily low. Nonetheless, if we're expecting lower dollar, that means we should expect higher pounds. So now I'm going to be watching this wick more specifically. The fact that we failed to take out that low is quite interesting. It might mean that we might want to try and grab it at a later point this week, but nonetheless, let's mark out that. It's so annoying. Let's mark out this wicks range similar to what we're doing on dollar, and we want to look at the midpoint of it more specifically. So let's get that delineated, and then let's drop down to the low time frames and see what we can identify. So on the 4 hour, you can see our price came down. There is a bullish order block here technically, and you can see our price is traded into that. And again, look at volume. Volume's closing above the 50% level of the higher wick. So long as price keeps showing respect like that, as far as I'm concerned, there's no reason to expect that price won't try and run for that Tuesday high here, or even the Monday high created here into that premium towards this bearish order block. So let's get rid of this for now. Let's go to the daily real quick. Let me see. So although we have a bearish order block here, if we're expecting a higher day and we know that pounds trading stronger than euro, so to speak, it might be worth us considering that there's a possibility we might go for that Monday high in line with dollar trying to trade to that Tuesday low. And there is technically an implied fair value gap right here. I'm not going to go into too much detail on implied fair value gaps right now. But let's go to the 4 hour and see what we can find. It's just that this high looks very juicy to me, and also it lines up nicely with the bearish order block here. So if I was going to run stops, considering we've taken out stops below this low, we've traded into a bullish order block, we're staying above the 50% level, and you know we have that bearish bias on dollar, assuming all plays along, then I'll be looking for longs on pound to try and reach up into this premium on the back of news. But again, with it being non-farm payroll week, we do need to be very careful. So let's go to the 1 hour, see what we can find. And you can see our price is treating this level and it's nicely came off of it. We do have a breaker now. We have a low, we have a high, we have a lower low. So this last up close candle, this is what's going to be the indicator for us. We're going to use this last up close candle because if price drops below this, I no longer want to be bullish. So long as price respects this, I'm happy to remain, so long as price respects the 50% level of this, I'm happy to remain bullish on pound and look for longs with the expectation to run out that Tuesday and Monday high. But it has to respect this candle, the last up close candle, because this should act as a breaker. So it'd be nice to see if we can make some kind of low, maybe in the London session, trade down, create the low, and then we can use that for potential setups to go long and then try and reach up into our premium PD arrays, assuming, again, this is all assuming that dollar respects its premium arrays to then turn and trade on lower. So I hope that all makes sense. This is very consolidated price action, guys, so it is very difficult right now, but you can see how I'm breaking down price from the higher time frame and constantly looking at different PD arrays that should be getting respected, assuming we do want to trade on higher. Because as far as I'm concerned, if price disrespects this breaker from the 1 hour, technically we could look at these both of these up close candles, you know, because it lines up with this bullish order block as well. But generally speaking, if price starts looking aggressively bearish and starts trading deeply through it, and you'll know what it looks like when it gets aggressive, quote unquote. If it starts doing all that, I don't want to be involved. But so long as it's struggling in here, and I do see, you know, willingness to want to trade on higher at the right time, so I'm looking at 3 a.m, maybe 4 a.m, maybe 7 and 8 a.m, then I'm happy to look for potential longs. But yeah, and we've got some relative equal highs up here. And yeah, like I said, this level, this was a bullish order block, wasn't it, from the daily? So price is using it, you know, it's not irrelevant. So that's going to be everything on pound. I hope that all makes sense. We're going to finish up on the daily. Sorry, we're going to finish up on Euro USD. I'm shattered, guys. So again, if we're expecting up close, if we're expecting lower dollar, we want to see can Euro trade on higher. I will be looking at the Monday high, similarly to what I just showed on pound. Now there is a fair value gap down here, and look, price failed to reach it and came away from it. The fact that price is failing to reach it is, you know, indicative of stronger price action in general. Don't get me wrong, we might come for it later in the week, especially with non-farm payroll, and we need to be mindful of that. It's just moving into Wednesday specifically, I'm going to be paying very close attention. But nonetheless, you can see that euro is showing a lot of weakness. Let's go to the 1 hour. Not the cleanest day. We might find that euro struggles to get that expansion, but I'm happy for euro to trade down into this fair value gap first. If we come out of it nicely at the right time, then again that will set us up for potential longs to run for that Tuesday high and Monday high, again assuming that dollar respects its PD arrays, which I've marked out very specifically. Because as soon as dollar starts trading through this, then my theory is no longer valid, and I don't want to be involved because I haven't prepared for that kind of price action. However, if it is valid and we're seeing the correct response, then I'm happy to trade it, because it's like, okay, it's in line with my theory, and there's reason for me to want to enter, or look for a setup accordingly. So yeah, I hope that all makes sense, guys. Definitely go watch Sunday's video if you haven't already. Yesterday's video was a bit useless, pointless. I was just saying, go watch Sunday's video, because you can see Monday's price action was pretty rubbish. Again, very messy, but they're building in orders. We haven't had expansion yet. We're still in the manipulation phase, so we need to allow price to do that. And with non-farm payroll, it could be easily two-stage manipulation. As in, although we're running lower, if this is the manipulation to move higher, then that move higher might be the manipulation to move lower. Now, if that makes sense to you, bravo, I'm glad you understand. If not, join the Discord, drop me a message, smash subscribe, drop a like, drop a comment. Hope you found it insightful, and I'll catch you tomorrow. In fact, let's go down to the 5 minute, take a look at what we can find. Yeah, I don't think this low is going to survive on euro, to be honest. I don't think that low is going to survive. Looking at GBP, it's a bit different, because GBP seems to be holding its own. And then looking at dollar as well, ideally we were going to respect the levels I spoke about, but euro, because of how weak she's been, I don't trust that this low will necessarily hold. If it does, it's going to trade down to here specifically, and it will bounce off that level. I'm looking at that. So yeah, getting very specific here, but who knows. So that's going to be everything, guys. Thank you so much for watching. Peace.